sometimes the majors, if you score under 600, the computer just says no. You get an automatic decline, and then it's just no deal from there. You've got absolutely no chance of getting that overturned if it gets credit declined.
Welcome to Smart Selling Steps with Kardinia Property, where you'll get the insider insights on the best way to get your property sold in the current real estate market.
Okay, so welcome to the Kardinia Property podcast. We've got a couple of new guests in the house today with Laura and Luke. So welcome aboard, guys. And hopefully we can get a bit of good information that'll be helpful to a lot of people out there.
So Luke and Laura, you're both experts in your field, which is...
Mortgage broking.
Correct.
Right. Welcome. Have you
Thank
been on
you.
a podcast before? Are you feeling a bit nervous today?
I have not been on a podcast. No, I'm not nervous. I'm excited.
Yeah, great.
If I was being asked about anything else, I might be a bit nervous, but hopefully we know a bit about what we do every day.
Which is awesome
yeah.
because that's exactly what we want to try and give our listeners. So, we'll run through. And first of all, I imagine there's lots of things that people forget to do when they're, thinking about buying and selling a property, specifically buying and finance. Tell us about some of the things that you've seen that people completely forget or they might do at the very last minute that makes your job a bit tricky.
Just speaking off mic, that did have a client just go ahead and buy a house without having to any advice beforehand. So I think that the most important thing is the earlier we can get involved in the process, the better. So there's never too early a time to involve a broker to get some advice around what's possible for them. The further down the line that we come into the situation, the harder it is for us to be able to give that good advice because there could be things in motion that can't be stopped at that point. I'd say the number one thing is just reach out as early as possible.
So, Laura, what's something interesting that you've seen someone forgotten?
Just every person that comes into my office, the first thing I do is do a credit check on them. So, because you just never know if there's some old Telstra bill that you haven't paid or some, credit card that your partner had that he forgot and, there's late repayments on that.
So what's the process? How does that happen? Because not many people would check their own credit. Is that something
That's what we do, yeah.
Or can anyone check their own credit?
Yeah. You just log on to Equifax and you can look that up and see what your score is. So, that's generally, you could think that everything's okay. You've got strong income, you've got good savings. But then if you, do a credit check and something pops up there, then that could...
So it can be things as small as skipping an old utility bill or anything that you may not be aware of, and that can have a major impact on your loan approval. Is that right?
Yeah, I mean, there still are banks that you can explain, but if it's really bad, like if you've got late repayments on a credit card or something, then there'll only be a few lenders, which are third-tier lenders, which are generally more expensive. That will do your loan.
How do you go if it does come back poorly? Is there a fairly quick process to resolve it, or does you have to go right back and? Not
really. There are credit repair companies out there, but they can cost thousands of dollars.
We work with a couple of credit repair companies that can remove defaults from files if there's a good enough reason to. And they obviously charge for that service. Most of them are like a no-win, no-fee. So if they don't remove the default, they won't charge you. But depending on how poor the file is, even once that default's removed, oftentimes the person's score is still too low to go through a mainstream lender. And then it's about, all right, well, let's put some good practices in place and wait that 6, 12, 24 months for the file to repair itself organically, which happens over time so long as they conduct themselves properly, and then sort of move forward from there.
So that leads me into my next question, is that I was thinking that if I was wanting to move or buy my first property or upgrade or whatever I'm wanting to do in my property space, the first question I would ask myself is, can I afford to do it? Mm-hmm. So how
I think
how do you answer that question?
What the banks think compared to what you think is very different.
Yes.
So the banks look at 3 different things. So firstly, they look at your income. How much do you earn? Are you casual? Do you do overtime? How long have you been at that current role for? So they look at that, and then they look at the other debts that you have. So if you've got an investment property, for example, and say you're paying, 6% on that, probably a bit more than that, the banks will put a buffer on that. So when they're assessing your income, they will assess it at around 9%. So that means, but then on the flip side, if you're getting rental income, then they also shade that at 80%. So they're not actually counting that as well. So they get you on both sides.
So it's not just as simple as I earn X amount of dollars, so therefore I can, type it into one of those automatic calculators online and see what their repayments are, and off I go.
No.
Much more complicated than that.
I had a client a week ago do that exact thing and say, through the CBA online calculator, it says I can borrow X amount. And it was fairly easy to go back with a few points that they wouldn't have even been aware of as to how their income is calculated and to some of the liabilities that they have, that there's just no space to put those in on those online calculators. Ultimately, they're a marketing tool. They're designed to get you to call the bank, and so the loan officer on the other end of the line can then go, well, it's not quite that much, but let's get you on in the books anyway. Whereas obviously, when you come through us and you go through that full process from the beginning, we can lay it out, properly.
So if I'm thinking can I afford to do whatever I want to do, what would you recommend the first thing would be?
Come to a broker.
Yep, speak to a broker, of course.
What's the difference between going to a broker and a bank?
Three little words, which I think sum it up nicely. It's best interest duty. And that's part of our code of ethics, which we have to adhere to, which says that we cannot recommend a product or a loan for a client unless it's in their best interest, not only in the short term, but in the long term as well. So banks aren't bound by that. If you walk into a bank, they'll have 3 or 4 different loan products that they will try and sell you, regardless of your situation. Whereas when we get all the information that we take from clients, we've got 30 odd lenders available to us on our lending panel, and we can make sure that the product and the lender that we recommend is suitable for that client.
Okay. And Laura, do the banks and the brokers get paid in a different way generally, or is it?
No, so brokers get paid by the banks. So we don't charge anything. Sometimes brokers charge a fee to clients if it's a really complex deal or they're going to refinance within a certain amount of time. But generally, we get paid by the banks about a month after settlement and upfront.
Is that fairly uniform across the board?
Some pay a little bit more than others, but it really doesn't affect our...
Yeah, so I can imagine what you were just saying before, Luke, about the duty of, depending on the broker, I'm sure that could get skewed depending on the pay structure. So if there's one lender that's offering to pay more, what you're saying is that's fairly level.
No,
amongst
it is.
The lenders.
So we are literally acting in the best interest of our clients. Right. So if you go straight into a bank, you're just going to get their policies.
The banks seem to be going away from that too, don't they? They don't they don't seem to invite people as much to talk about home loans. It seems to be more going towards brokers.
Yeah. Well, I think we've got over 70% of the market share now. Yeah. So that's grown significantly in the last
Banks are probably recognising that too and trying to look after the third-party channel, the broker channel, a little bit more.
Yeah, well, when you ring a bank and you're on hold for 40 minutes before you speak to someone, it's probably not
Let us sit on hold for 40 minutes and do the heavy lifting.
So do most brokers work on their own individually, or do you work under I don't know, is it a small business, or is it a
can be anything.
Franchise, or what's the different ways of doing it?
Pretty good examples here. So I'm a broker within a independent business in Geelong. There's 3 loan writers. We have 7 staff altogether.
Give us a shout out. Which one?
GSE Finance Solutions, of course. Thank you, Sarah. Yep. Whereas Laura.
Yeah, so I'm part of Podium Money, which is we've got a big team in Melbourne, which offers, all different commercial, resi, asset finance. But I'm on my own down in Geelong. I've got my loan analyst. So,
it can be as big as or small as you want. I think the majority of brokers are the sort of sole trader, one-man band type of operations. And then obviously as the business grows and you can scale, that obviously allows you to sort of do more business and offer better services to your clients as well.
So what are some of the typical reasons that say loans may get knocked back unexpectedly? And what we were talking about before, when a buyer comes in or falls in love with a house, as they typically do, and then it's quite an emotional process, and it's heartbreaking when that can't or doesn't end up happening. What are some of the reasons that you've had of either finance being rejected or time taking, or reasons for things going over time, or problems that you've come across that hopefully can be avoided?
Well, I think the credit check, going back to that, like it's just sometimes the majors, if you score under 600, the computer just says no. You get an automatic decline, and then it's just no deal from there. You've got absolutely no chance of getting that overturned if it gets credit declined. I've never had any luck.
Mortgage insurance. So that's something that it's a word. I don't know. Many people know what it is. Is there a point? What point does mortgage insurance kick in, and what is mortgage insurance?
LMI, lender's mortgage insurance.
We try to avoid it wherever possible. It's easier for first home buyers with a few different schemes that are available. But yeah, essentially, if you're borrowing more than 80% of the value of the property, the bank will insure against you defaulting on that loan, and you have to pay for it. So it's realistically a fee. It usually gets added into the loan, which means you're paying it off over 30 years. So yeah, we try to avoid it wherever we can. But sometimes it is just part of.
It's not the worst thing in the world.
No, if it means getting into a property, then it's worth it.
So is it different for people of different ages? Like if you were getting a loan at 50, would the insurance be higher because you might not have the...
No, it's just how much deposit you have. So, yeah, like Luke said, if you're a first home buyer, there's a lot of schemes that the government guarantees you, so you don't have to pay that LMI, which is great. But yeah, if you're not a first home buyer, doesn't matter what age you are, if you've only got a 10% deposit, then you need to factor in that lender's mortgage insurance.
So speaking about first home buyers and pensioners come to mind, what difference, if any, happens when you're dealing with those two groups of people?
Yeah. The older you get, there are some complications there, mostly around banks wanting to know what the exit strategy is to pay down the debt. So, typically for a young person, we'd write a loan over 30 years. As we refinance people, in their sort of 40s and 50s, you obviously want to be bringing that loan term down because you don't want to be writing a 30-year loan in your 50s. So generally the banks will ask, okay, well, even if the client's going to work for another 10 years, it's a 15-year loan term. So how are they going to pay out the remainder of that balance? So we'll do exercises around looking at downsizing options, actually provide specific property examples that the client could downsize into today to show how the loan balance could be repaid with the proceeds of that sale. Once you're sort of 50 plus, most banks will start asking for that sort of information. Pensioners is really difficult because there's usually not a lot of income there to service. So that's, yeah.
So that would then be really important that they come and talk to a professional and avoid those online calculators.
Correct.
Or do you have people sometimes that come with, sometimes this happens to us, that they have well-meaning family and friends that give them advice on different things, that it might not be exactly in their best interest? Does that happen to you?
There's always someone that talking at a barbecue or, my mum says this and I'm like, is your mum a mortgage broker?
Yeah. The most common one is the first home buyer stuff.
Yeah.
A lot of first home buyers still think that they'll get a grant, like a cash grant. That's only available for building or buying a brand new property. So little things like that. Little things like that, which, it's easy enough for us to dispel. But yeah, if you haven't had the conversation, then you're not going to know.
And I imagine the government changes its policy and its support
every year.
Yeah, is it every year or what's the normal?
Generally, they bring out new schemes and they, update old schemes, replace things.
Federal and state. And different.
There's always something going on. And they're also always changing policies as well. So that's why, circling back to why you should go with a go with a broker rather than bank, is because we know all the different policies,
and that's where,
especially with self-employed.
There was some different schemes that were quite beneficial to people, but they had very little take-up because no one really understood it. It was so complicated.
Yeah.
And again, I guess that's where someone who's an expert in the field can alert people to those, because it can save a fortune. I mean, if someone's getting stamp duty exemption on a $600,000 house, it's a substantial amount of money.
It's about 25 grand.
Yeah.
Yep.
So I mean, that's a good half of the deposit. So yeah, it's really valuable to go and speak to someone who knows what they're doing, like you guys, prior to going on that journey.
So we've had lots of awesome information come out, but if you were to summarise, and I know it's very tricky because there's so many different scenarios and different types of people that you work with.
Yeah.
But what would be the maybe top 3 or 4 tips that you would give, people who were coming to you either to do before or during, or to help you help them? So we'll start with you, Luke, and then we'll switch back to Laura.
Yeah, I think I'll just come back to what I said earlier. Just involve us as early as possible, because even if you're 2 years away from buying your first home, you might not be. You might be actually closer than you think with some of these low deposit schemes and stuff that the banks and the governments have in place for first home buyers. So we can try and educate and put you on a good plan to get you into a home sooner rather than later. In terms of, again, for first home buyers, if they're saving, having a really good, solid savings basis that we can evidence to the bank is a really good part of someone's profile that we can say, hey, they're clearly capable of making loan repayments because look at how consistently they've been saving.
What
so that's a really
time
good tip.
frame do the banks typically look back over to make that savings plan?
Depends on the type of deal, but if it's a sub 80% deal, there's no usual real stringent policies around that. But once we get above 80 or 90%, generally they'll want to see it over at least 3 months. Sometimes longer, depends on the bank. Again, that's why it's important to involve us as early as possible so we can start strategizing with the client.
Because I'm thinking like maybe 6 months out. If you know 6 months out that you're sort of thinking about making a move, would that be too long to...
Not at all.
No.
I mean,
Space.
if you think about like I'm working with some clients now that I've been working with since I got into the business 2 years ago, and they are only just now sort of about to transact. So, and that's just how long it takes to save up a deposit, now because of where property prices are. So, I'd say 6 months is.
Well, that's awesome because you're able to guide them through that process.
Yeah, it's a long journey.
Yeah, and then you get to really get to know their families or the people, and you can really see how that works in the best interests of your clients.
Yep. And it's just the beginning. Like this is just the first home, for that particular client.
So then you hopefully have a client for life.
That's the idea.
Yeah.
So Laura, what's your tips?
I would recommend getting ready by just cleaning up bank statements and debts. So when you go to get a loan, they obviously take into account living expenses. Obviously, if you've got like a one-off living expense, like you've just been on a massive overseas holiday to Europe, like a once-in-a-lifetime sort of thing, then we're obviously going to look at that and be like, well, they don't do that every year. But as part of the assessment, we need to go through. So if you've got, I don't know, gambling or a lot of...
So on your bank statement, it's coming up with the TAB or whatever consistently.
Yeah.
That would be a red flag.
Yeah, because we have to go through it all. And, the client tells us what they think they spend, but then we go through their bank statements and sometimes it's not, well, most of the time.
Most of the time it's either
it's not what they say.
Way under declared or way over declared.
Yeah.
And it's like the question before about can we afford it? And on paper, potentially the client can afford it, but we have to have those real conversations. Okay, based on what you're actually spending, you're going to have to make some drastic changes to your spending habits if we're going to write this loan. And that's, again, part of our best interest duty is we're not going to be writing loans for people that actually can't afford them just because the bank calculator says that they can.
Yeah, and it's an important conversation to have. Obviously, if you're going to buy a house and have a mortgage, you're not going to be out having foie gras every night.
Smash Davo.
Yeah, exactly. So it's all just about that conversation as well. But
what you said about there just reminds me I think credit cards are a big part of a lot of people's lives, and a lot of people just have them sit there even with no just available for emergency. But the bank looks at the credit cards,
they look at the
if I'm
limit,
wrong,
not the
as
balance.
though they're maxed out.
Yeah, because you could go to the CAS tomorrow and spend all your money.
Absolutely. Yep.
But yeah, so the bank looks at the limit, not what you've got
So when you're
owing.
doing your assets and liabilities test, the limit of the credit card is a liability. So if you can do it, it's advisable to close it down and get rid of it.
Well, if you've got borrowing capacity issues, yes.
Yeah.
That's the first thing I do is do a credit check and find all these credit cards that have come out of the woodwork and then do the borrowing capacity calculations. And then if they are struggling, I'll be like, can you reduce it or can you get rid of it? Or car loans. And that was the other thing I was going to say. Clean up any debts that you don't need, or if you've got a personal loan, if it's just a couple of grand and it's impacting your borrowing capacity, because like I said before with the buffers, even if it's a small loan, it might, impact your borrowing capacity a lot.
So big takeaways, the big rocks are come to and chat with a broker as soon as you can.
Mm-hmm.
Clean up and know your credit history. If you don't know it and you don't want to have a look at it yourself, you guys can do it
come to
for
us.
them. And as soon as you start thinking about buying and moving, that's the time to try and gather this information. So if you need to rectify it, you can.
Yep.
Yeah.
Because there's a whole lot of stuff that probably the general population, especially, every 7 years on average, people transact. And it's not like we do it every day. So
Exactly.
yeah,
Yep.
Thank you so much for coming in and sharing your tips. If people want to get in contact with either of you, Laura, where can they find you?
They can find me on Facebook, Instagram, on my website.
So
or you can
Laura
give them my
Waters,
number.
yeah.
Laura Waters from Podium Money.
And Luke?
Yeah, I'd just say head to the GSC Finance Solutions website. You can contact us and the team via there. And, of course, on socials and everything like that as well.
Great. And you're obviously both based in Geelong and local businesses.
Correct.
So
Yep.
it's awesome to keep things local and easy. Can clients just come in and actually speak to you in person?
Yeah, of course.
Like it's not
Absolutely.
over the phone or on one of those auto chats or anything?
They are here.
We're
with
real
us.
people.
They're not AI. generated.
Yeah, but it does make such a difference, isn't it? to
Yeah.
that? And it's a big trust exercise. As you said, showing your bank records where you might be
Yeah.
going to McDonald's for lunch every
I know.
day or something like to someone and they see exactly what's going on.
Yeah.
I'm not sure if is that worse than a sports bet account? Macca's for lunch every day.
Yeah, I take the Maccas over the sports.
Yeah.
Well, we'll wrap up, but thank you again so much for being here and sharing your knowledge, and I'm sure that some of our listeners will touch base with you both in the future.
Thank you.
Awesome. Thanks for having me.
Thanks, guys.